Master the 1-hour chart, 5 steps that turn struggling traders profitable. Let me ask you something. Have you ever opened your trading platform, looked at the charts, and felt completely overwhelmed? You check the 1-minute chart, prices jumping everywhere. Then you switch to the 5-minute chart, still messy. Then you jump to the 15-minute chart. Now you're even more confused. You see signals everywhere. One indicator says buy, another says sell. You enter a trade, and 5 minutes later the market moves against you. You close the trade in frustration. Then, suddenly, price moves exactly in the direction you predicted. And you sit there thinking, why does this always happen to me? Look, if you've ever experienced that situation, you're not alone. In fact, according to data from major brokerage reports, more than 70 to 80% of retail traders lose money consistently. And here's the crazy part. Most of those traders are not losing because they lack intelligence. They're losing because they're looking at the wrong time frame and making decisions too quickly. But here's what most people don't realize. There is one time frame professional traders respect more than almost any other, and that is the 1-hour chart. So in this video, we're going to break down something powerful. We're going to talk about how mastering the 1-hour chart can completely transform the way you trade. By the end of this video, you'll understand why the 1-hour chart is the sweet spot for profitable traders, the 5 steps professionals use to read it correctly, the psychological traps that make traders lose money on lower time frames, and how to use the 1-hour chart to develop discipline, patience, and consistent profitability. And if this video helps you think differently about trading, make sure to hit the subscribe button and give this video a thumbs up, because on this channel we focus on building the profitable mindset, the way professional traders actually think. All right, let's start with something most traders completely misunderstand. The time frame trap. Here's the thing. Most beginners are obsessed with speed. They want fast trades, fast profits, fast results. So they gravitate toward the 1-minute and 5-minute charts. But this is where things start going wrong, because those lower time frames contain a huge amount of market noise. Noise means random price movements that have nothing to do with real market direction. Think of it like trying to predict the ocean by watching a single wave. You can't understand the tide by staring at a splash, but when you zoom out, the entire pattern becomes visible. And that's exactly what the 1-hour chart does. It removes the noise and reveals the real structure of the market. Here's what most people don't realize. Professional traders are not trying to catch every movement. They're trying to catch the meaningful movement. And meaningful movement usually takes time to develop. According to research in market microstructure, most price fluctuations on extremely low time frames are driven by algorithmic activity and liquidity adjustments, not true directional bias. Which means if you trade purely on small time frames, you're essentially competing with high-frequency trading algorithms, and that's not a fight you want. But the 1-hour chart filters out most of that noise. It shows you the real battlefield. Now, let's talk about the 5 steps, because this is where it gets really interesting. These steps are not complicated, but they require something most traders struggle with: patience. Step 1. Identify the market structure. Before placing any trade, the first thing you must do on the 1-hour chart is identify the market structure. Is the market trending up, trending down, or moving sideways? This might sound simple, but most traders skip this step entirely. They jump straight into indicators. But price structure tells you everything. Higher highs and lower lows mean uptrend. Lower highs and lower lows mean downtrend. Anything else means consolidation. Now, you might be thinking, okay, but why does this matter so much? Because trading against the structure dramatically reduces your probability of success. Legendary trader Paul Tudor Jones once said, "Don't fight the tape." In other words, don't fight the direction of the market. Step 2. Mark key support and resistance. Once the structure is clear, the next step is identifying key levels. These are areas where price has reacted multiple times in the past. Support, resistance, liquidity zones. Here's an analogy. Imagine throwing a ball inside a room. The ball keeps bouncing between the walls. In the market, those walls are support and resistance levels. Price often reacts strongly when it reaches them. Now here's where the math becomes interesting. Let's say your average trade risk is $100. If your strategy gives you a 1-to-3 reward-to-risk ratio, that means one winning trade earns $300, which means you can lose 2 trades and still remain profitable. This is the power of trading around strong levels. Step 3. Wait for confirmation. Here's where most traders fail. They don't wait. They anticipate. They see price approaching a level and immediately jump into a trade. But professionals wait for confirmation. Confirmation could be rejection candles, break and retest, strong momentum shifts. Waiting for confirmation dramatically improves probability. But psychologically, it's hard, because waiting feels like missing opportunities. Yet, ironically, patience is exactly what creates profit. As trader Jesse Livermore famously said, "The big money is not in the buying or selling, but in the waiting." Step 4. Control risk like a professional. Now, let's talk about something uncomfortable: risk. Because this is where most traders destroy their accounts. Look, even the best trading strategies lose sometimes. That's normal. Professional traders typically risk 1% or less per trade. Let's do some simple math. If you have a $5,000 account and risk 1% per trade, that's $50 risk per trade. This means you could lose 10 trades in a row and still have most of your capital. But if you risk 10% per trade, just 5 losing trades can destroy your account. Risk control is not exciting, but it's the difference between survival and extinction. Step 5. Let the trade breathe. This is the final step, and honestly, it's the hardest. Once you enter a trade on the 1-hour chart, you must allow the market time to move. Many traders sabotage themselves by constantly watching the trade. Every small movement creates emotional reactions: fear, greed, doubt. But here's the truth. If your analysis was based on the 1-hour frame time, then the trade needs time to develop. Checking it every minute only increases anxiety. This is why many successful traders check their trades only every hour or two. The psychology behind the 1-hour chart. Now, here's something fascinating. The 1-hour chart doesn't just improve technical analysis, it improves psychology, because it forces you to slow down, and slowing down reduces emotional decision-making. Studies in behavioral finance show that rapid decision environments increase impulsive behavior. Lower time frames create exactly that environment, but the 1-hour chart encourages deliberate thinking, which leads to better decisions. The trader who discovered this. Let me tell you about a trader named Daniel. Daniel started trading using the 1-minute chart. He took dozens of trades per day. His account constantly fluctuated, some days up, most days down. Then, one mentor gave him a simple rule: only trade the 1-hour chart for the next 3 months. At first, Daniel hated it. He felt bored. He felt like he was missing opportunities. But something surprising happened. His trades became more accurate. His emotions became more stable, and his account slowly started growing. Because fewer trades often mean better trades. The profitable mindset shift. Here's the shift that changes everything. Amateur traders chase action. professional traders chase quality setups. The 1-hour chart forces you to wait for high-probability opportunities, and over time, that discipline compounds into profitability. Final motivation. Look, trading success is not about finding magical indicators. It's about clarity, patience, and discipline. The 1-hour chart provides that clarity. It filters noise, it slows your decision-making, and it aligns your trades with the real structure of the market. Master this time frame, and you'll already be ahead of most traders. If this video helped you understand trading in a new way, make sure to hit the subscribe button and give this video a thumbs up, because on this channel, we break down the real strategies and mindset behind profitable trading. And remember this: the market rewards patience, the market rewards discipline, and the traders who master those qualities are the ones who eventually win. I'll see you in the next video.